If you want to analyze deals like a professional and avoid expensive surprises, you need to use a detailed Proforma, not just for protecting your rental income, but for truly understanding every cost of ownership in Boston or anywhere in the Northeast. Today, I'm breaking down exactly how I build my Proformas, what every category really means, and how these numbers can save you from rookie mistakes and thousands of dollars in losses. Plus, you'll learn why having a Proforma isn't just smart, it's often required if you plan to finance your property. I'm Jarrett Lau. I own 50 plus cash flowing rentals in the greater Boston area, and I never buy a property without running the numbers through my Proforma first. Here's how it works, line by line. First, always start with your gross scheduled income, the total rent if every unit is filled at market rate, plus any other income streams, laundry, parking, storage, etc. You can see in my sheet, I break out every unit, estimating rents based upon real comps and include every dollar I expect to collect. Now you have to subtract the vacancy and credit losses. In Boston, I use at least 4% for vacancy. That's the reality even in a hot market. Don't plan for perfection. Bad debt, which is 1.5% of my gross income in my model, covers rent you may never collect because of evictions, skips, or tenants not paying in full. This isn't just being negative, it's about planning for the real world. And let's talk expenses. This is where most new investors get burned because they underestimate or they forget categories. In my Proforma, I have capital expenditures, aka CapEx, at 2.5% of gross income. This is your long-term repair fund. It covers big stuff like roofs, boilers, windows, major plumbing or electrical, even full exterior painting. You might not spend it every year, but you'll need it eventually. Management fees at about 5%, whether you manage now or not, always budget for this. If you want to grow, professional management becomes a must. And 5% in the greater Boston area is more or less what you can average out. Maintenance at 7 to 10% of gross income. The older the building, the closer to 10%. This covers routine repairs, appliance replacements, landscaping, cleaning, snow removal, pest control, and more. Taxes and insurance, get these from the most recent bills or have your insurance agent quote it out. Never guess that. Boston taxes and insurance can be much higher than you expect. Next up is going to be your utilities. You're going to budget for things like gas, electric, and sewer, only if you pay them. For sewer, if you can't get an exact number, estimate about $25 per month per person in the building. For common area electric, I use $50 per month. And if tenants pay all the utilities, you can set them to zero. But make sure that it's written up in the leases. So you're going to add up all those numbers and you're going to get that total expense. You subtract that from your income and you get your NOI, or net operating income, the true measure of a property's earning power before you pay your mortgage. Then you're going to figure out a down payment, usually about 25% for an investment property, and you're going to run on your cash on cash return, your cap rate, or a DSCR if you're considering a DSCR loan, which I talked about in a different video. Now here's the key insights that too many beginners miss. Banks are always going to require a Proforma when you're buying an investment property. If you're financing, your lender may ask for your Proforma, or they'll build one themselves based upon your numbers and their own conservative estimates. Why? Well, because lenders want to see that you're not just planning for the good times and the high rents, but that you're also accounting for every realistic expense. And they know that profit isn't just about collecting rent, it's about what you keep after all the bills get paid. And this includes all the surprises that do happen in real estate. Proforma also gives you the confidence to walk away if the numbers just don't work. In Boston and the Northeast, margins are really tight. If a deal doesn't pencil out on paper, it's probably just it's not worth falling in love with. Stick to the numbers, let them make the decision for you, not emotion or wishful thinking. If you'd like my Boston Proforma template, or if you want me to review a deal with you that you're considering, comment Proforma in your city below or DM me. I'll send you my spreadsheet and I'll help you tailor the numbers for your market. And in my next video, I'm going to walk you through a real Boston Proforma step by step so that you can see how I use these numbers to find deals that actually cash flow. I'm Jarrett Lau. Subscribe for more real world investing tips, and I'll see you in the next one.